everyone, Marv Eisen from Timeless Dollar, and today we're going to do a chart reading exercise on the morning of February 2nd, starting on the just before the market opens, on the morning of February 2nd, to see if we can spot a way where we can find the right place to enter and exit to make some money in this market. Now, I've got my cursor set at 9:21, just before the market opens, and I'm going to start this video. Okay, so I'm going to stop it now. Now we have a 9:30 candle and a 9:33 candle. So we are 6 minutes into the trading day here, and we see that there is a significant momentum move in the first 6 minutes of the trading day, indicating that, well, and how do we know it's a momentum move? Because the length of the candles relative to the previous candle indicates the price movement during the 3-minute period relative to the much shorter price movements, smaller price movements in the previous several hours. So we could assume that we have a momentum move up and we could jump on. And I'm not even showing stochastics in this chart. I'm just going strictly by price action. So again, momentum move indicated by a long candle. Let's continue. We're only 6 minutes into the trading day here. Are we on a trend? And as a trader, we always want to find a trend. Now at 9:42, we see a spinning top with long shadows on either end. And this could be an indication that our trend might be ending. But notice that we're only about the midpoint of this candle. We really didn't retrace past the midpoint, at least not to where the candle settled. Nevertheless, if you spotted the trend here, you could have picked up a few points. And let's see, if you jumped off, and that would be fine, if you jumped off, let's see if this trend were to continue, and if so, maybe we could jump back on. And that's exactly what we should have done, because as we can see, higher highs and higher lows. So as this day progressed, and now we're at 10 o'clock, just about 10 o'clock, and at 10 o'clock, let me stop it here. 10 o'clock, this is the 10:15 candle, we are at 38.26. Now we started out the day at 37.99, so 27 points at 10 o'clock, and if you caught it early at 38.01, let's say, 38.02, and rode it up to 38.26, you would have had a very nice day. 22, 23, 24 points, $50 per point on the Emini, $5 per point on the micro mini. But if you're trading the micro mini, you're probably going to want to trade several contracts. So this would have been $100 per contract on the micro mini. And if you traded 2 contracts, you would have made $200, 3 contracts, $300. And at 10:15, we're at 10:15 here. We know we caught the trend because hindsight's 2020. Let's see what happens a little later. Trend is intact. Trend is intact. But there we go. So this is where, if you didn't get greedy, this would have definitely shaken you off, and you would have lost a few dollars over here. So if you spotted these three soldiers here, this would be an indication to somebody who was proficient at reading candlestick formations. This could indicate that the trend was intact, because typically what we would expect in this candlestick pattern, what we would expect is that this trend would continue. We have 3, 6, 9 minutes of movement, of price action, where the price did not retreat. And then the next candle, the 4th candle, the profit taking set in, and we would have gotten shaken off. Nevertheless, this is definitely a trend that would have made us some money, and what we want to find when we trade is the trend. This is Marv Eisen from Timeless Dollar. Remember, the trend is your friend. I'll see you in my next video. Thanks for watching.